This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Well, happy Friday and welcome to Bloomberg Businessweek Daily Radio. This is Norah Mulinda here with Scarlet. We're in for Tim Stenivek and Carol Massar, of course, as we are really wrapping up the week. Still, of course, about 2 hours left in the trading day as we're really wrapping up the week here. But we did see a reversal. Of course, we did know yesterday we saw the NASDAQ 100 falling more than 2%. S&P 500 also pressured here, but we are seeing a bit of a reversal today. What was once a risk on our off rally, we are now seeing to becoming a risk on here, Scarlet. Lots to really dig into, especially as we're still experiencing this time period where people are really looking for any sort of economic data to really get an indication of where the Fed may be headed forward.
Yeah, This week has been really all over the place. We started with this idea that the government shutdown was ending, so there was relief, and then that gave way to all these fears about the AI valuation bubble and the idea that the Federal Reserve interest rate cut in December is no longer a sure thing. In fact, it's a bit of a toss-up right now, and it did look like the S&P 500 was on course for its second weekly decline, but that has turned around, as you mentioned, Norah, and the benchmark index is now up 1/3 of 1% as we head into the final 2 hours of trading.
Talk about a seesaw. This is a lot of waffling back and forth that we're seeing right now, but let's talk about what's going on a bit deeper here. Let's move over to Amy Morris with the Business Flash.
Thank you, Norah and Scarlet. You guys are absolutely right. We've been a little bit all over the place. Wall Street erasing early losses with a tech share resurgence. That was led by Tesla. It jumped about 2%, but those gains now starting to sputter. Traders are waiting for a deluge of economic data, and they want to see what the Fed decides at next month's meeting and how that data might impact that decision. We're going to check all of this, but first, the markets all day long. We bring them to you here at Bloomberg. The S&P 500 now up about 0.2%. NASDAQ up about 0.4%. The Dow is down about 0.4%. The 10-year Treasury yield at 4.14%. The 2-year yield at 3.6%. Kansas City Fed President Jeff Schmidt says more rate cuts could actually drive inflation pressures. He said during an event in Denver that more cuts could have longer-lasting impacts on inflation and not do very much to help shore up the labor market. And that is what has traders betting that the odds of a rate cut in December are now about 50-50, and that's what's leaving the market kind of lukewarm. Bitcoin also continuing to slide, now down more than, almost now 3.9%, hovering around 94,900. It wasn't that long ago when Bitcoin was at 100,000. Sedera shares are 106% higher, 106%. Merck agreeing to acquire the therapeutics company for about $9.2 billion. Merck is looking to expand its portfolio of treatments because the patents are expiring for a lot of the drugs in the next few years. The U.S. and Switzerland landed a preliminary trade agreement, lowering tariffs on many Swiss goods, including watches, from 39% to 15%. In exchange for this, Switzerland has committed to investing in the U.S., including $200 billion during Trump's term. And Trade Representative Jamieson Greer says the White House is unveiling fresh tariff exemptions to address high food prices, including reciprocal tariffs from agricultural products that are not grown or produced in the U.S. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Norah Mulinda and Scarlet Fu.
Thanks for that Business Flash, Amy. I'm Norah Mulinda here with Scarlet Fu. We are here in place of Tim Stenivek and Carol Massar, but they will be leading the show 3 p.m. onward on radio and YouTube. But let's take a look at where markets stand right now. Scarlet, I'm seeing a lot of uncertainty in the market. I mean, it seems as though traders are pretty cautious right now. Of course, the thoughts really remain on the Fed. Of course, government data that we're looking to come, tariff concerns still in focus. There's so many other things moving in the market here, but we are joined by somebody who will help us break a lot of this down and focuses on this very closely. We're joined by Emily Graffeo, and of course, she's a cross-asset reporter here for Bloomberg News. Emily, what are you looking at right now? What's driving this equity market sell-off uncertainty that we're seeing? Of course, we're up a little bit right now, but it really has been a cautious sentiment here.
Yeah, we had a pretty rough day for anyone who was long equity markets yesterday. And even this morning, the S&P opened a lot lower. And so we've been able to climb back up. But I think overall, when you look at how the macro is driving the equity market, it's clear that right now this idea that we're maybe not going to get as many rate cuts as we thought previously is kind of percolating through this feeling of, okay, maybe we're a little bit more risk on today, but we're still, only up about 0.2% on the S&P 500. If you look at Bloomberg Economics has an index of Fed speak, and it measures just how hawkish and how dovish the recent Fed speak has been. And we had a lot of Fed speakers yesterday. Kashkari was one of them saying, we have inflation that's still too high, running at 3%. The index of Fed speak that Bloomberg tracks rose to its most hawkish level in a month yesterday. And then when you look at where the bond market is pricing the odds of a rate cut at the next Fed meeting, earlier this week, the odds were at like 60%, and now it's dropped to actually less than 50.
And about a month ago, it was almost like near certainty.
It was like a 100% certainty. So I think people are starting to question, even though the government has reopened, we're still in this data glut, and we still have a chance that maybe we won't get a rate cut.
Right. The amazing thing about this is happening even before we get all the data that's supposed to be released at some point next week. There's countless jobs reports or jobless claims reports. We also have retail sales. We have inflation on the consumer level and on the wholesale level. And on top of that, Emily, we're not totally done with earnings season just yet. I mean, we have the biggest one of them all coming out.
Yeah, that's right. So certainly if you're looking for kind of signals about the economy, you might not even need the economic data to get it, because we are going to get a big read on the consumer next week for earnings. We have Home Depot, Lowe's, Target, Walmart. We also have Nvidia, which we'll get to in just a second. But yeah, in terms of whether or not we get the September jobs report, I saw a couple notes in my inbox. Someone said perhaps we'll get it released next week. There was a question mark, maybe we'll get it.
And maybe it's not even complete too.
Yeah,
right?
Maybe it's not complete. Maybe we'll get the payrolls number, but we won't get the unemployment rate. At this point, the equity markets, the rates markets, everything's still trading without the government data. But you do hear more and more people saying, we just can't get a good grasp on the economy, because even though we've reopened, the data is not all of a sudden coming in all at once.
And a lot of people, before relying on a lot of those private data resources, especially as we're thinking about this vacancy or the fact that we haven't really seen much data here from the government. But of course, that should be coming up soon, as we've really been flicking at here. But let's move on to Nvidia, because you did bring that up in conversation. We do know that Nvidia is going to be reporting on next Wednesday after market close. And of course, we know this is basically the market Super Bowl, right? But how are sources that you're speaking with thinking about Nvidia as we're heading into that earnings report, but then also just this idea of a potential AI bubble in the market?
Yeah, the concerns about there being an AI bubble it's certainly been something that people have been talking about for a long time. Valuations are getting too high. It's interesting now to watch how it's even spreading into it's not just equities now, even in the investment grade corporate bond market. Companies are getting, that area of the market is now getting exposed to this AI trade, as we see these big tech companies, Meta, Alphabet, tap into the market and get billions of dollars to kind of build out data centers that will fund AI. For Nvidia specifically, so I track ETFs, as Scarlet is familiar with. She tracks ETFs as well. There's an ETF that goes 2x long Nvidia. People have been piling in this week. So it's had 4 straight days of inflows of people bidding up this company, this stock. Maybe they didn't do well yesterday, but there is certainly still buyers out there for this company heading into the earnings.
A lot of anticipation. And of course, this time we won't have the messiness of whether it includes the China estimates or not, because it's very clear that Nvidia can't sell its highest grade chips to China. You mentioned the credit markets. There is some fear returning to the credit markets, especially on the high yield side. There was a company that managed to sell debt yesterday, but it had to do so at a pretty deep discount. And then, of course, you had another tech company that had to withdraw its investment grade offering. So all of this kind of adds up to credit investors being a little bit more cautious, even as we see the equity market recover. How do you read that? And what do you think is a read through for equities?
I have been trying to ask a lot of portfolio managers on the credit side, specifically in high yield, that exact question of, what does this mean? How does this all end? It feels like everyone, both in the bond market and also on the equity market side, they have this sentiment of, like, we don't know what's going to be the catalyst that tips this over. Mm-hmm. And we might not need all of these data centers that billions of funding is now going into, but we don't want to be on the wrong side of the bet. If this is an emerging technology that changes the world, we want to be in on it. So we can't ignore, and particularly for less on the high yield side, but for the investment grade side, a lot of these companies that are lending to Meta, Alphabet, they point out that these companies have so much cash. Right. So watch the cash. If you're an equity investor, look out in earnings. How much cash flow do these companies have? If they're still generating more cash to pay off the debt, it's not really a risk for the bond investors, and it could be good for the equity investors.
But something to definitely watch out for, because nervousness there might portend nervousness in equities too. Emily, thank you so much. Emily Graffeo is our Bloomberg News cross-asset reporter. All right, we want to take a look at the big picture now when it comes to policy out of Washington and bring in Josh Wingrove. He is our senior White House correspondent, and he joins us now from the White House. And Josh, there's any number of directions we can go in here, particularly when it comes to the latest on the Jeffrey Epstein drama and the story there. But I want to start on tariffs, and specifically how the U.S. government is now carving out some tariff exclusions because they need to address this affordability crisis that became very acute after the election results came out. Josh, what are you seeing?
Yeah, we're told the president will sign an order today eliminating tariffs or reducing them at least. It's a little unclear on food products in particular that the U.S. either does not make at all or doesn't make enough of. Beef, coffee, bananas, tomatoes are among that list, we're told. My colleague Adriana and I just have a story on the terminal shortly about this. Speaking of all the things we could talk about today, forgive me if you hear a lot of sound behind me. The president is currently blaring a playlist on the Rose Garden, and you could hear it all through the compound.
What's the song
you could probably hear it in
right
Virginia. That's a good question, but we just got off Phantom before this, so he's
I know he takes a lot of pride in that playlist.
Yes, exactly. So this is obviously, look, the administration is going to say that this is always part of the plan. There have always been exclusions. Jameson Greer, the U.S. Trade Representative, told us that earlier today here at the White House. It is also, of course, an acknowledgement that tariffs have an impact on the price of things, which Trump has downplayed throughout his tariff campaign. And so it is in some ways at least a tacit sort of retreat or withdrawal. What is, I think, important and clear, or will become clear, and we just don't know right now, is how many of these exclusions apply to countries that have deals and how many are just to countries that don't. And if it's don't, then that I think is more of a step back on the part of the administration. Whereas if they're just confining it to countries that have reached agreements, for instance, they announced 4 just last night, then that is maybe a bit more of a narrow action. So we just don't know the scope. We don't know what number of foods. We don't know whether the tariffs are simply being eliminated on them. We just don't know what countries. A lot up in the air, but what we're told is the president is signing it today, so we expect some details here pretty shortly.
Josh, keeping with this tariff theme, of course, we do know news came out that the U.S. and Switzerland did reach a preliminary trade agreement to lower tariffs on many Swiss goods, including watches, from 39% to 15%. That sounds like a big drop to me here. Talk to us about the developments here between the U.S. and Switzerland.
Yeah, and Liechtenstein, let's not leave them out of the party. Big deal with both of them. This has been in the works for quite some time. The Swiss were hit with a pretty high rate and argued that that was because of some weird distortions in the data and how trade is recorded, including flow of gold. And so they've been sort of clamoring to be treated the same as the EU. That's what this deal essentially, give or take, does. Treat them the same as the EU with a 15% rate. The flip side is the Swiss are agreeing to a $200 billion investment pledge over 5 years, 67 billion of it, or 1/3 in the next year here in the U.S. That follows models, similar to what we saw, for instance, with the Japanese and Koreans. So they get a deal that they've been waiting for a long time. Trump gets to boast about these pledged increased Swiss investments, but that was sort of one of the sore thumb trade deals that came out with the early math on how Trump calculated his tariffs, and I think is a signal on how a lot of this is really sort of still evolving, really. But between that and the deals announced last night, including with Argentina, but also some other Central American and South American countries, they're sort of starting to check off a lot of the list, and it will raise attention on the other countries, which is starting to be kind of a dwindling number for which Trump has not made a deal. India for sure is one of them. Canada and Mexico are sort of in a different bucket, but we're watching those as well. So he's trying to sort of knock these off, but the Swiss one is a big one.
Yeah, I'm so glad you mentioned the countries that we don't have deals with, because I think about Canada and Mexico. They're our biggest trading partners, and we still haven't hammered out final details with them. Are there talks scheduled?
My Canadian family do not let me forget it.
Yeah,
I hear
I'm sure.
about it every weekend. Yeah.
Yeah, it's a lot of
right
uncertainty
now,
for Canada.
Yeah, I think with Canada and Mexico, they're in a different bucket because they have that USMCA carve-out. Trump doesn't like the word exclusion, but that's what it is. And so I think there's genuine conversation going on in both countries about how loud to complain, because they have one of the lowest total average effective tariff rates in the world by merit of the fact that so much of the trade is simply not paying a tariff at all. So those two are in their own bucket. And we'll see where they go. Right now, there's really not a lot of momentum at all in either country for negotiations. This might just get rolled up in the USMCA conversation in the months and years to come. On the other countries, India, that has been a tough one to track. It was the first country that they announced trade progress with, and they just simply haven't gotten there. So I think it's anyone's guess where it'll go. The Swiss thing, I should give a shout out to our colleagues at Bloomberg in Switzerland. We scooped this story a few days ago that they were nearing the deal. We asked the president about it, and he dunked on me for asking all kinds of Swiss questions. But there was a reason, Mr. President. That's why we're here. They're on the cusp of a deal for it. He asked whether I was buying Rolexes, and I cannot afford a Rolex. I don't know about everyone else, but I wish you well. I wish you well if people can.
We should just mention Amy Morris, who's in our Washington bureau, points out that "Don't Stop Believin'" is the song that is playing in the background.
That is, I can hear that loud and clear.
There you go.
For sure. And to be clear, it's quite a distance. So the volume, I am about 10 times farther from the sound than Trump's office is. So if I can hear,
So you're hearing it clearly.
He is pumping right now, for sure.
So lots of headlines flying, but what has also been dominating a lot of the news flow right now has been the recent release of some of Jeffrey Epstein's files. Does this conversation surrounding President Donald Trump's potential involvement with Epstein at all detract from the administration's agenda and goals? How are Republicans viewing this right now, Josh?
I mean, Trump clearly wants to change the channel. He, posted something this morning directing Pam Bondi to start investigating certain Democrats, including former President Bill Clinton, Larry Summers, and their potential or alleged ties to Epstein or the Epstein files. So he's trying to redirect the attention. I think you can tell that he thinks this is not a good news story for him. And of course, there are open questions right now, in particular from the release from oversight Democrats of these documents that, raise fresh questions about how well Donald Trump knew Jeffrey Epstein, and of course the core question of to what extent, if any, were the people around Epstein aware of what he was ultimately accused of, and has come to light since then. So right now, Trump is essentially trying to shift the channel, change the channel, don't stop believing, still cruising. And so we'll see where it goes, but this has been consistent since the administration that he just does not want to talk about the issue. He downplays the issue when people ask about it. He says that's old news. Trump has a superhuman ability to change the story and change the channel, but this has been a tough one for obvious reasons for him to do so. So it seems to be dogging him.
All right. Well, Josh, as we wrap up this conversation, what will you be watching for or listening for from the White House next week?
We have a story, I believe, on the terminal now. I hope so. I'm not scooping anything, but on expectations for the visit by the Saudi Crown Prince next week. That is a big one to watch. An earlier story that we had, sort of teeing it up, said that was actually kind of tense planning it, to the point that at one point people thought it might not proceed. So there's more tension, despite what has otherwise been kind of a love-in between MBS, as he's known, and President Trump. So we'll watch that, in particular questions on chip export licenses, F-35 sales, and other questions around whether the Saudis support normalizations with Israel.
All right, Josh Wingrove, thank you so much. Senior White House correspondent Josh Wingrove joining us from the lawn of the White House as the president's playlist blares in the background.
We all heard it loud and clear here, but definitely keeping a look at markets right now. NASDAQ 100 up about 0.3%, S&P 500 almost about 0.2% higher.
It's 2:21 on Wall Street. I'm Amy Morris. This just crossing the Bloomberg terminal. The U.S. will allow some Lukoil transactions outside of Russia. The U.S. recently imposed comprehensive sanctions on Lukoil, which is Russia's second largest oil producer, in a move to cut Russia's energy revenues. A judge says he'll approve a $7 billion opioid settlement with the Sacklers Purdue Pharma, including money for victims. This new agreement replaces one that the Supreme Court rejected last year, finding it would have improperly protected members of the family against future lawsuits. The judge says he would explain his decision in a hearing coming up on Tuesday. A White House national security memo reportedly claims Alibaba provides tech support for Chinese military operations against targets in the U.S. The Financial Times reports the memo includes declassified top-secret intel on how Alibaba supplies the People's Liberation Army with capabilities that the White House believes threaten U.S. security. We check markets for you all day long here at Bloomberg. The S&P 500 is up 0.25%, NASDAQ up 0.4%, the Dow is down 0.4%. The 10-year Treasury yield at 4.14% and the 2-year yield at 3.6%. Bitcoin down now right at 3%, around $95,000. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Norah, Mulinda, and Scarlet Fu.
All right, Amy Morris, thank you so much. Amy Morris in Washington with our Bloomberg Business Flash. This is Bloomberg Business Week. Scarlet Fu and Norah Mulinda in for Tim Stenovic and Carol Masser. They will be back in the next hour reporting live from Boston Children's Hospital in Boston, Massachusetts. We talk a lot about Cantor Fitzgerald, and we throw the name around because obviously, it's one of the boutique investment bank firms here in New York, but also because Howard Lutnick was the guy behind it, and he is now the Commerce Secretary in Washington, serving the President Trump administration. His two sons are now, I guess they've inherited the company, they've taken over the company. I'm not totally clear on what their role is within the company, but I do know the company is highly involved in a lot of the crypto deals that have taken place this year. Todd Gillespie is a Bloomberg News banking reporter, and he's been looking into this for, I want to say, weeks, months?
Well, I've been covering them for, nearly 2 years now.
Okay, years then.
Yeah. But we recently did an interview that came out today, Scarlet, that basically broke news on their financials this year. They're having their best year ever. And then they've also obviously this year been facing various questions about conflicts of interest.
Okay, so here's my question. His sons are, I guess, running the show, but what does their position look like on the org chart of Cantor Fitzgerald, the overall business?
Give us a tree.
Sure. So Cantor Fitzgerald is a group that has basically 3 companies underneath it. One is a private investment bank called Cantor, not to be confused necessarily with Cantor Fitzgerald. And separately, it has 2 public companies in which it holds controlling stakes. Newmark Group, which is a property firm, property broker, and BGC Group, which is a financial broker across London and New York as well. But Cantor, which is kind of the core of the business, essentially the most secretive, most private, kind of Howard Lutnick's, realm for the past 30 years before he went into the administration. I mean, this is the hub of the group where they are investing in, that they're building out teams that are dedicated to crypto. They are building out a lot of investment banking, trading, Bitcoin-related lending projects. They are really taking advantage of everything that is coming with the hype around Trump-related booms in those sectors.
And this part is controlled by Brandon and Kyle Lutnick.
Well, Brandon and Kyle Lutnick own the entire group. They have upwards of an 80% share, I think, if not even more, of the entire group. But yeah, Brandon is the CEO of the entire group, CEO and chairman of the entire group. Kyle, his older brother, is the executive vice chairman. Kyle's quite involved with Newmark specifically, the property group. But yeah, Brandon is in many ways the driver of a lot of this crypto-related business. But they have 3 co-CEOs of the private investment bank, Sage Kelly, Pascal Vandelier, and Christian Wool. And between those 3, they kind of drive a lot of the day-to-day operations. They build out the investment bank. They have been essentially Howard Lutnick's deputies for the better part of a decade before he went to DC. And they, in many ways, are sort of the driving force behind the company still. And they're, very much in partnership with the Lutnick sons.
So taking a step back, just remind us of the relevance. How has Cantor really fit into this broader financial ecosystem, and what has that shift in power looked like?
Yeah, well, I mean, that's a good question, Norah, because, 5 years ago, Cantor Fitzgerald was a minnow on Wall Street. Well, some might say it's still a minnow on Wall Street, let's be clear. I mean, their revenue is about 2.5 billion. That's, roughly like a third of Jefferies. It's a similar model to Jefferies. It has a trading sort of broker-dealer vibes. It's got an investment bank, M&A, but it also does brokerage, has a big equities platform as well. But for years, it was fairly small. And Howard Lutnick took it over in the 90s from Bernie Cantor and Bernie Cantor's wife. There was a big legal spat over this. For years, it was, it's been a relatively small scale Wall Street bank. Obviously, now it's been launched into the limelight because of Lutnick's involvement with Trump. He fundraised for Trump last year. He became the chair of his transition team. So he was responsible for drawing up the list of candidates to basically go into the Trump administration, into the cabinet, and then himself ended up in the cabinet as well, which then forced this big transition to Brandon, to Kyle. And that was a transition that I think these sons expected at some point, that their father would step back. The fact that it was done for political reasons and the fact that it was done maybe quite early. Bear in mind, Brandon Lutnick is only 27. Kyle Lutnick is 29. For context, I'm 28. So when I meet these guys, I'm like, you could be, you could be in my class at school. But in many ways, they've sort of, they've embraced the challenge. Brandon Lutnick has been standing. He basically led this conference that was happening this week in Miami, where I was. He interviewed some big names. We had Ted Cruz there, who, by the way, is also the chair of the committee that scrutinizes Howard Lutnick's Commerce Department in the Senate. So, there are all sorts of overlaps. As you would expect in the Trump world, where business and politics probably interact more than in any other administration we've had. But, fundamentally, this business is now saying, they have been preparing for years for this moment, essentially, for the crypto boom, for a lot of AI and data center work that they're doing. They've been hiring bankers as well who are trying to take advantage of the regional bank mergers in the US. There's a lot of different aspects to this. And I think being a leaner bank, they would say, not as clunky and slow moving as some of the bigger Wall Street institutions, has allowed them to take advantage of these opportunities as well. But have they been preparing for the advent of crypto being embraced by the government, given that this happened all rather suddenly when President Trump became, was inaugurated? I mean, they have, Scarlet, to be fair to them. I mean, they hired their first crypto banker in 2020. Years ago. They've been Tether's main banker for I think even longer than that. Essentially, Howard Lutnick created that relationship, built that relationship with Tether when it was essentially a pariah. Bear in mind, Tether is a company that is now trying to fundraise at a valuation of up to $500 billion, which would put it, a joint most valuable private company in the world, incredibly profitable crypto company. But now, obviously, we're talking years later, the Department of Justice just last year was reported to be investigating Tether. This week, the Tether CEO stands on stage with the chair of the SEC and the chair of the CFTC, embracing them, holding hands, well, not holding hands, but smiling, I should say, next to them. And it kind of gives you a sense of how times have changed. So how have they leveraged their connections at all in Washington? Have we been seeing that playing out at all? Well, they would say that they, any Washington, in their defense, they would say that any Washington interaction they would have is just the same as, any other firm would have, right? But Brandon Lutnick was invited to the White House to have dinner with Trump and other big Wall Street head honchos like David Solomon, Jamie Dimon, Ken Moelis was there as well this week. I think that was Wednesday night. I actually think I saw Brandon leave the conference event in Miami to head off to the plane, not quite realizing where he was going at the time. But, he's been invited and brought into this realm. Obviously, his father, Howard Lutnick, was also at this dinner. So make of that what you will. There's also a case here of kind of correlation versus causation, or these kinds of senses, right? Like if you are administration that wants to embrace crypto, who are the kinds of banks whose conferences you're going to speak at? Where are the sort of partnerships? Right. Who are the industry leaders that you're going to be consulting? Maybe they might be the clients of the biggest crypto bank that everybody's talking about. Which would make sense. But at the same time, there are very understandable questions that are being raised over conflicts here. Yeah. And, I think it's important for people to keep an eye on that. So we are speaking with Todd Gillespie. He's a Bloomberg News banking reporter. He's written a story, Lutnick's sons score record year as Cantor denies any conflict of interest from the association with President Trump. This is the third most read story on the Bloomberg terminal over the past 8 hours. You mentioned that there's a lot of people wondering about these conflicts of interest, including
including some Democratic senators, Ron Wyden, Elizabeth Warren. What have they done in terms of asking for more information, asking for clarification?
Yeah, so in August, I think actually back in July, even earlier, there was a report by Wired that Cantor was essentially trying to broker tariff refund deals, which is also a good story on the terminal today about this as well. And we wrote another story, I think just last week, over the kinds of companies that were brokering these deals. But essentially what they do is match hedge funds with corporates that are paying tariffs, and hedge funds are offering to buy the right to any tariff refunds that these corporates may get if the Supreme Court strikes down Trump's tariff agenda.
It's total hypothetical.
Total hypothetical, quite a risky deal. You're getting these for 20 cents on the dollar. But essentially there are various banks, who have special assets team, distress type teams who are brokering these deals on Wall Street. We know Jefferies are, Oppenheimer are as well, for instance. We've reported that, but Cantor Fitzgerald and Cantor, the investment bank, was considering doing this earlier in the summer, and this was reported. This provoked various questions. It provoked a letter from Elizabeth Warren and Ron Wyden, essentially just sort of saying, hey, this is the Commerce Secretary's son running an investment bank. The Commerce Secretary himself is responsible for the tariff agenda. Maybe there are some questions that are being asked there validly. But also the bank in its defense would say that, hey, everyone else on Wall Street is doing this just because we have this connection, why can't we? And also in this trade, bear in mind, you're not necessarily taking a position, you're just taking a fee on what's happening. So there are various things like that have cropped up this year.
So you mentioned some of the pushback that we're seeing in Washington, but are we seeing any pushback from competitors, or is anyone
good question.
talking about this, and maybe even in the crypto space?
Yeah, I mean, we have seen various tweets particularly from big name people in the crypto world who, bear in mind, there are a lot of factions within the crypto world. It's certainly not one monolith, as I've had to learn over the past year or two. But yeah, there are certain crypto people who, for instance, don't like Tether, they don't like Cantor, they don't like the Trump administration's take on for whatever reason. And people who have accused them fairly unsubstantiatedly of conflicts of interest. For instance, there was a unsubstantiated tweet that Howard Lutnick was trying to help Tether with this big fundraise that Cantor is advising on. There was no evidence for that provided. There was no one reputable that ended up affirming that or reporting that. So there are these sorts of speculation. The same thing with this tariff trade. There were rumors that circulated around Washington after that story came out that, and people, there are Chinese whispers, as you can always imagine, and things sort of get twisted, but there are also obviously very fair questions as well. And I can tell you there's a lot of chatter on Wall Street about, what happens when big things come out with the administration related to tariffs and who profits, who advantages, who takes advantage, who can hear it first, that kind of thing. But those are largely in the fund space. So, yeah.
All right, Todd, fantastic to get your take on everything you learned about Cantor Fitzgerald, Cantor and BGC and all the various entities of this empire that Howard Lutnick has passed on to his two sons. Todd Gillespie, Bloomberg News banking reporter, on his story, the Lutnick sons score a record year as Cantor denies any conflicts of interest with the Trump administration.
Yeah, I mean, let's just take a look at markets. I mean, that was a lot to digest, but I do want to look at what's going on right now. S&P 500 up just about 0.3% here, Scarlet.
This is Bloomberg.
It's 2:40 on Wall Street. I'm Amy Morris. A judge says he will approve a $7 billion opioid settlement with the Sacklers Purdue Pharma, including money for victims. This new agreement replaces one from the Supreme Court that was rejected last year, finding it would have improperly protected members of the family against future lawsuits. The judge says he will explain his decision on Tuesday during a hearing. Several Wall Street heavyweights have struck deals with companies that could be eligible for reimbursement if the Supreme Court strikes down President Trump's tariffs. Now, even if the court decides Trump did not have the authority to impose the tariffs, there's still a chance that importers might not get their refunds. And Trade Representative Jamieson Greer says the White House is ready to unveil fresh tariff exemptions to address high food prices. These exemptions are designed to remove reciprocal tariffs from agricultural products not grown or produced in the U.S. Markets are paring back their losses thanks to a tech surge being led by Tesla. We check the markets for you all day long here at Bloomberg. The S&P 500 up 0.3%. NASDAQ now up 0.5%. And the Dow is down 0.4%. The 10-year Treasury yield at 4.14% and the 2-year yield at 3.6%. Sedera shares jumped 106% after Merck agreed to acquire the therapeutics company for more than $9 billion. Merck needs to expand its portfolio of treatments because a lot of the patents for its drugs are expiring, including the patent for Keytruda. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Norah, Mulinda, and Scarlet Fu.
Thanks for that, Amy. Norah, Mulinda here with Scarlet Fu. We're in for Tim Stenovic and Carol Masser, but there's so much to talk about right now on this Friday, whether it's in the markets or just broader company news right now. But one thing I did want to talk about is cybersecurity, Scarlet. I mean, cybersecurity is becoming increasingly more important, especially as we see a lot of online threats ramping up and honestly getting more and more creative.
Yeah, not a day goes by that you don't hear about a country or a company getting hacked by someone or some band of people. And, at a consumer level, obviously, it's very concerning when you've got everything in your email or in your phone.
Absolutely. With us to talk about this and more is Vincent Pilette. He's CEO of Gen Digital, which trades on the NASDAQ under ticker GEN. You may be familiar with one of its brands, Norton, but we are joined by Vincent from Belgium, actually. Vincent, tell us a little bit about the current landscape right now as we think about protection from cybersecurity threats.
Yeah, as you've mentioned, the threat landscape is very dynamic at a high level, now all enabled by AI, which really increased the complexity of the threat, the sophistication of the threats, and becoming very difficult to detect. And you mentioned that the enterprise are being attacked, but the enterprise are protecting themselves more and more. So who is left vulnerable in the middle is the consumer. And whether it's a deep fake, a scam, a phishing, leveraging your data that have been breached somewhere else, and then capturing that to create some damages. The overall damages for the consumers in the US alone is over $15 billion and growing double digit these days.
Pretty incredible growth rate there. What are the most common ways that people find their data, their personal data compromised? And what are some of the more unusual ways in which it happens?
I would say that today, 80% of the threat-facing consumers are scam or social engineering. And it's about collecting a vast amount of personal data that you have in the digital world. Whether you know it, you put them on your own social media websites, or whether those data have been breached as part of you shopping online or shopping into a different environment. And then the data is being captured solely in the dark web. And now with AI tools, very sophisticated, personalized emails or text are fooling consumers. We've detected last quarter over 140,000 websites that mimic real brand websites driven by AI, but actually are just meant to capture and create financial damages for consumers.
How is Gen Digital leveraging AI just to push productivity forward at the company as we think about it in relation to cybersecurity?
As a topic of the day, of course, right? So not only is AI is a threat from being used by hackers, a threat for consumers, but we also at Gen Digital using AI to protect our consumers. So we're the first one to come with the full model for anti-scam and being able to detect real-time scams as they hit either your text, your voice, or your emails. And now we're embedding that more into chip manufacturers to create deep fake solutions and really making sure we can detect what's the problem of the day. What's the reality? Is this message real or not? Is this video real or not? Is this voice real or not? And we're heavily investing into moving our overall threat protection into an AI-powered threat detection.
So in terms of companies and consumer spending on protection from the cybersecurity threats, what have you observed so far in 2025? We know that earnings season has gone pretty well for most companies. You have just reported results as well. Your second quarter adjusted EPS beat analyst estimates by a penny, and your second quarter revenue coming in slightly higher than what was anticipated. Are companies growing their spending on cybersecurity at a stable rate, or has that picked up? Do you see them pulling back a little bit if the economy starts going south a bit?
No, definitely people are investing more into making sure that the defense is becoming more and more sophisticated to address the overall threat landscape. You've seen our report. You mentioned that we had another outstanding quarter, a beat and raise here in Q2. That followed another beat and raise in Q1. as we're developing not only the protection of security, but enable the consumer to be secure, to be private, to also manage their identity and their reputations, we are expanding the pie, if you want, and that has enabled us to post it another quarter at about 25% growth with the help of our most recent acquisition, which is leading into the financial wellness. As you protect your data, you want to protect your financial position, you also want to help consumer manage and grow that position.
So we're headed into the holiday season. Do you all tend to see any sort of uptick in terms of cybersecurity threats or maybe identity theft even? And if so, how can consumers protect themselves?
It's definitely a higher risk season. Obviously, everybody wants to go out and shop more, dine more, and that's at every point in time you're exposing your personal data out. So we constantly educate our customers to make sure that these days they are really controlling where do they put their credit cards, which website they go and shop from, and making sure they use our anti-scam detection tools and models to make sure we can detect where the risk is. But definitely we advise everyone to be cautious these days. Hackers are out there and trying to collect your personal digital footprint.
Does people's infatuation with cryptocurrency, Bitcoin, digital wallets, does that increase the likelihood that they might be a target of cyber attacks?
I would say that the overall penetration of your digital footprint, your life becoming more and more a digital life, and the method of payments that you mentioned is just another sign of moving more online, which then creates, of course, also more risk to be attacked. So the overall trend is to move more online in many different dimensions, including the method of payment.
What's your strategy for rebuilding or maintaining trust at a time where cybersecurity failures continue to make headlines?
And it's not only cybersecurity failure, it's also a time where with AI, it's difficult to detect what's reality and what's a fake. So is there still a reality we're discussing? Mm-hmm. And so definitely trying to making sure we equip our consumers in our tools with deep fake detection and ability to really see what is produced by a machine versus what is a natural piece of content is an important need that we're trying to address.
All right, good stuff. Really appreciate your joining us today with your recap of your results and to give us kind of the overview of what it looks like here in the cybersecurity space. Vincent Pilette is chairman and CEO of Gen Digital, trading again on the NASDAQ under the ticker GEN. And of course, Vincent was joining us by Zoom from Belgium. He's usually based in Mountain View, California, but traveling at the moment. Norah, I'm looking at a market that is remarkably resilient, given where we stood yesterday at the close, a big decline, and this morning at the open when it looked like it was very much risk off, and the S&P 500 was on its way for a second straight weekly decline, the first time since June. But that has dissipated, and we're now higher for the week.
Right. I am seeing us higher for the week, up about half a percentage point if we look at the S&P 500 and where it is on trajectory to close for the week on this Friday. It's been a little bit of a roller coaster ride this week, Scarlet.
Yeah, we're not sure what's going to happen, obviously, when it comes to the economic data. And there's now a big question over whether the Federal Reserve will move forward with interest rate cuts in December as well. Previously, people had pretty much thought it was a slam dunk. From New York, this is Bloomberg Businessweek. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
This is Bloomberg Businessweek. We are live from the Bloomberg Interactive Brokers Studio here in Midtown Manhattan. Carol Massar and Tim Stenovec will be back at the top of the next hour. We did get some headlines in the past few minutes from Lori Logan. She is the president of the Dallas Fed, talking about how she's not convinced that she's seeing signs of inflation moving back to the 2% target. Of course, it's not anywhere near that 2% target at the moment. She also says that the modestly restrictive policy that we currently have is still appropriate, and she does not think the job market needs further insurance rate cuts. Again, she is not a voting member of the FOMC, but she will become one in 2026. Having said all that, Norah, we are looking at equities, at least the S&P 500 and the NASDAQ in the green. The Dow Industrial is underperforming, lower by 1/3 of 1%, as we have come back from early losses and declines yesterday.
Yeah, I mean, we did see a bit of risk-off sentiment yesterday. You did see that trickling into the market today, but it does seem as though maybe we're getting a bit more risk-on energy. We have information technology, the second best performing sector in the S&P 500. You're really seeing everyone really trying to make a bid here on AI in the pathway forward.
Well, speaking of all that, we have some companies that will give us a big read on what's going to happen in AI. Let's take a look at some stocks on the move. I'm Scarlet Fu with Norah Mulinda, and we're joined now by Bloomberg News managing editor for the Bloomberg Markets live blog, Kristine Aquino, and the big daddy of AI is Nvidia.
That's right, Scar. And it's making quite the comeback this morning or this afternoon, because this morning it was definitely down. So Nvidia, ticker NVDA, those shares are now up more than 2%. And, you know, we know that Nvidia, when it's the tide that basically lifts or sinks all boats, and it is currently lifting all the boats because along with Nvidia's rebound, of course, we see the S&P 500 also up. It is the biggest contributor to the S&P 500's rally at the moment, and makes a lot of sense given just the size of the stock. Now, everyone, of course, is going to be looking forward to the earnings next week. That is going to be after the bell on Wednesday. And of course, the big focus there is, again, whether they're going to be able to deliver beats for both their third quarter fiscal results as well as their fourth quarter guidance. A lot of focus going to be on demand for the GB300 chip, as well as how much they're spending in CapEx, particularly with hyperscalers. I mean, we saw that rising $27 billion in the second half and $90 billion for 2026 in terms of projections. And so, yeah, a lot of focus on how much more funds they're going to be deploying to really develop AI capabilities.
Yeah, I mean, I was just looking at a story earlier on the Bloomberg terminal that was talking about just the volatility being priced in right now in the options market heading into Nvidia earnings. As you mentioned, just a behemoth. It is the Super Bowl IV market, so it's definitely interesting to see how the effects of the Nvidia earnings will definitely play out and ricochet into other sectors.
You know that it's part of the culture and part of the zeitgeist when people are holding watch parties for Nvidia earnings, which was happening a few years ago when, you know, Nvidia's results shattered all expectations of, you know, what it can do. And people were saying, oh my gosh, like this is the new gold rush, and you know, people organizing parties, cheering when the numbers came out.
Do we know if any are happening next week?
I don't know. If
anyone
you're
any invites?
let us know.
Yeah, we'd love an invite.
Send people over and report live from it. What else are you watching?
Also looking at Walmart today, right? So that's been in the news because of a CEO change. So Walmart ticker WMT, those shares down just a little bit today. So down 0.2%, so pairing some of its earlier declines, and probably just investors trying to make sense of what the CEO handoff means, right? So Doug McMillon is going to be retiring in February. He's going to be replaced by John Furner. They are very much cut from the same cloth, though. Both of them have been longstanding Walmart employees. They both started as hourly employees. Wow. They're both lifers. McMillon has been credited as somebody who really transformed Walmart as a digital powerhouse, particularly when it comes to e-commerce businesses. And so, you know, I think the question really for investors is Furner going to be able to build on that success and maybe even extend it, evolve it, right? And, you know, given that they have consistent performance, they have gained in market share and are maintaining that for the most part, it's really just a question of what Furner can do to build on that.
Yeah, I mean, I'm looking at what analysts are saying on Wall Street for Walmart. We have 46 buys, so about 95% of the street says buy the stock, and only one saying hold and one saying sell. So it seems as though there is some optimism here on this company. Lastly, what else are you looking at?
Looking at Nike, Norah, today. So Nike shares ticker NKE. So those shares extending declines. They're down more than 3% now. So they're in the headlines for a number of reasons. Today, it is because they're apparently ending an initiative that gave employees an extra week off each year to promote mental health and wellness. So it's their annual wellness week, which started in 2021, has been held each year in August, but now no more. No more weeks off for wellness, which I have to say is quite generous, right? A whole week off for wellness sounds amazing.
Wait, so wellness is back? I mean, people are not having mental health issues anymore?
I don't know. Maybe they're like, we don't need this anymore. But apart from that, I mean, Nike has had a mixed week as well, right? So it got upgraded at Wells Fargo to overweight from equal weight, but then 13F filings also show that some companies cutting their positions on the stock. It's set for its biggest rally since late July, but some multi-year downtrend.
All right, Kristine, Aquino, thank you so much. And for more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. And Norah, of course, Tim and Carol are coming up next. Bloomberg Businessweek Daily continues live from Boston Children's Hospital in Boston.